All right, everybody. Good evening. It is 6 o'clock here on the East Coast. Welcome to today's webinar, How to Blend Fundamental Valuation with the Insights of Technical Analysis. This is the fourth and final of this webinar that I'll be doing this week, couple today, couple yesterday, so hope you guys enjoy it. Just want to do a quick sound check just to make sure you guys can hear me okay. Those of you joining me via GoToMeeting, thank you. Also, we have folks joining us streaming live on YouTube as well. So if you can hear me, just let me know that you can hear me. There we go. Thank you, Ellen. Ellen says yes. If Ellen can hear me, she has her speakers turned on. I'm coming through good, so that means everybody can hear me. Awesome. Well, thank you very much, Dave. Appreciate that. All right, guys. So my name is Jerry D'Ambrosio. I'm the manager of educational content here with VectorVest. This is our education team, and boy, has it grown over the years. I started with VectorVest 17 years ago, and just like everybody else who really first starts out with the company, we start out on the support department, answering calls and helping customers on the phones. And back then, there was only one or two people in the education department. Much smaller company back then. And we've grown, obviously, over the years. We have a number of different instructors that help you no matter what type of portfolio you're managing. So we'll teach you how to trade options. We'll teach you how to manage a retirement portfolio. Dividend analysis and dividend-paying stocks are a part of that. And then we also teach a lot of different swing trading strategies, shorter-term technical setups. So what we hope you're doing is allocating portions of your overall investment capital to these different instruments, right? Because if you're let's say you're self-directing, self-managing a portion of your retirement funds, you don't want to keep the stocks in that portfolio or those type of stocks in the same portfolio as your swing trading stocks. If you're doing that, again, we hope you are. We hope you're managing different types of portfolios. A swing trade is managed completely differently than a long-term investment, right? Money management is very, very different. So no sense putting them in the same portfolio. So we hope you guys are breaking down the different portfolios. We have you covered, no matter what type of portfolio you're managing, what type of stocks, any type of ETFs, options. We have instructors that will help you and guide you through the entire way. So here's what you're going to learn today. First, the difference between fundamental investors and technical traders. And there is a fundamental disbelief or a disagreement in how these two folks, how these two camps, how they see stock prices. Okay? Now we have to lay that out first, because then we're going to show you how we merge the two. The VectorVest method of merging the two. You don't have to just look at fundamentals. You don't just solely have to look at price and volume. We're gonna combine the two camps into one methodology. And then finally, this is always the hard part, how to quickly and easily identify the best trades. Okay, there are different ways to identify trades and investments. We want to do it the most efficient way and not spend a lot of time, and we're going to learn how to do that later. This will help. I'm going to give you a copy of these slides if you stick with me to the end. That's the rub there. We'll be together for about an hour, so maybe about 6:45 or so. Say, hey Jerry, don't forget the slides. I sometimes forget. I got a lot of content to cover here in the next hour, so just somebody say, hey Jerry, don't forget the slides, and what I'll do is I'll put them in the handout section of your GoToMeeting control panel. Okay, everybody good? So the two different camps of investors. First, there's the fundamental analyst. A fundamental analyst or fundamental analysis aims to evaluate stocks to measure what they're worth, what the intrinsic value of the company is. Okay? First and foremost, the fundamental analyst is going to look at the individual company and the financial strength of that company. He or she will study earnings reports and balance sheets and assess debt to equity and sales volume and sales growth and all of the underlying fundamental data that comes in on a quarterly basis They're going to go through all that because, again, what the end result needs to be is, what is this company worth? I know what I'm paying for the stock price. I know what I'm paying for the stock. Price is, kind of right there, right? Value, intrinsic value is a little bit tougher. Okay. A fundamental analyst will also look at industry strength and favor stocks in industry leaders. Okay, not laggards. And also, a fundamental analyst will study the overall economy, what interest rates, inflation. We know those are the two enemies of earnings. So all of these things are taken into consideration when a fundamental analyst determines if this is a stock, if XYZ stock is a stock that they'll buy or not. Okay. Now, the second camp is the technical analyst. Differs completely from fundamental analysis. Traders, swing traders, shorter term traders will tend to use technical analysis because they're trying to pinpoint entries. The holding period is a very short period of time. A swing trade is anywhere from days to weeks, maybe longer, just depending on performance. But a trader is going to look for opportunities based on historical trends and statistical probability. And they're looking solely at price and volume. Okay? They feel that all of that fundamental data that we just talked about, that a fundamental analyst will study, they feel that it's already factored into the price. Okay? They don't try to measure value. Instead, they look for patterns because they believe that patterns will repeat themselves. And those patterns and trends suggest what a stock price will do moving forward. Now, if you get these two folks in a room, if you get these two camps in a room, they will argue till they're blue in the face on who's right, because they truly believe in what they're doing. And a fundamental analyst believes that the financial strength of the company and the underlying data, fundamental indicators, are what's driving the stock's price. A technical trader thinks that's already baked in, and it's emotions and psychological behavior and reactions at certain levels that determine the future of the stock's price. Now, who's right? Who's right? We feel that they're both right, and there's merits in both. So what our job is, and this is what I'm going to show you here today, is we want to merge the two. Okay? Dr. DeLito, in an essay that he wrote a long time ago, he said something along the lines of, good portfolio management starts with buying the best stocks. I'm a swing trader. I like to get in and out quickly. I like to look for some favorable short-term opportunities, but I'm not buying any old stock. I'm not buying these junk $2 stocks or $3 stocks. I've never heard of the company before. They have terrible earnings. It's a risky investment. I'm buying, even though if I'm trading for the short term, I'm buying the best stocks. For example, just as of a couple of days ago, June 12th, let's take McKesson Corp. You've probably heard of this company, right? As of June 12th, the stock price was right around $3.93. All right, so that's what you're paying for it. But what is it worth? Let's talk about the fundamental long-term investor who spends who knows how long parsing through all that economic data to determine what the intrinsic value of the company is. Well, fortunately for you guys, if you are VectorVest subscribers, we give you that information in an indicator. We tell you what the value is. We've already parsed through that data. We take that data and we spit out information. So McKesson Corp has a value, what we think it's currently worth, $538.43. So that's a nice start, right? If I'm going to pay $393 for something and it's worth $538, I'm on board. Okay, that's just your first piece of analysis. No matter if I'm investing in the long term or I'm trading in the short term, I want to favor these types of undervalued companies. What does that do for a shorter term trade? It just increases the probability that it will be a successful and profitable trade. The next two indicators here are our fundamental indicators, relative value and relative safety. We have a lot of folks in here that aren't VectorVest subscribers, so I'm going to go through this quick. Relative value looks at long-term price appreciation potential. over the next 1 to 3 years. It's on a 0 to 2 scale. Above 1, that means that the stock has long-term upside potential. Below 1, it means it doesn't. And a lot of that fundamental data that again a fundamental analyst will go through to determine price appreciation potential, we do it. We do it for you. And again, we give you indicators on a very simple scale to determine favorable or unfavorable. So I'm looking at this stock and it's undervalued. It has tremendous upside potential over the next 1 to 3 years. Relative safety is an indicator of risk. So it's a safe stock. If the indicator were below 1, it would be a risky investment. Okay. Relative timing is a technical indicator telling us that the price is in an uptrend or in a downtrend. So here, as of just a few days ago, McKesson Corp, not only is it fundamentally sound, it's also in an uptrend. And our master indicator, VST, combines all three of those. It's at a nice level above 1 as well at 1.24. All right. Then we get to some other data that, you should pay attention to if you're a long-term investor. Earnings per share, $27.45, nice 7% earnings yield. 25% earnings growth rate. Now, the growth rate, you really want it to be higher than the current sum, whenever, current meaning now or current a year from now. You want it to be higher than the sum of interest and inflation. The sum of interest and inflation right now is about 10 or 11%. So you want a stock's earnings growth rate to be greater than the sum of interest and inflation. You want them to be able to kind of take that hit, still stay profitable in high inflation and high interest rates environment. Okay, they pay a dividend as well. Great company. I want you guys to get a snapshot, kind of take a mental snapshot of what we see here. Undervalued, relative value, relative safety above 1, fundamental indicators, good earnings growth rate, good earnings yield, they pay a dividend. This is what you want to see when analyzing a stock based on their fundamentals. Okay? So that was as of June 12th. So no matter what stock you're looking at in the VectorVest program, if you see across the board those indicators at those levels, you know you have a fundamentally sound company. Now the hard right edge, I want to kind of take you through an example here. Hard right edge of this chart is October of 2022. Basically, we're looking at October of 21 to October of 22. And what a good looking chart, right? The stock has stayed above its stop price the entire time. It has nothing but a buy and hold rating. Indicators are favorable as of the hard right edge. Look at the earnings per share, bottom left to upper right, relative value above 1, relative safety above 1, nice earnings growth rate. So as of the hard right edge here, October of 2022, all of our fundamental indicators are good. They're favorable. And they've been favorable. So if you bought this back in 2020, there's no, and it was meant to be an investment, a long-term investment. There's no reason why you should have sold this stock at any point during this 1-year time period, right? So this is what we call a stock that is suitable for your retirement portfolio, for your longer-term portfolio, okay? Now, what's to say that you can't trade it, right? You own it in your retirement portfolio. You're making money. It keeps going up. It never gets a sell rating. No reason to take it out of your long-term portfolio. What's to say that you can't identify short-term favorable price and volume situations where you can make and supplement those long-term returns with short-term gains? There's nothing that says you can't. So let's look at the hard right edge. Now, let's say you weren't in this stock long-term. Let's say you're looking to buy it, right? It's not in your retirement portfolio, but you want it to be. You've done the fundamental analysis. It's all good. You're looking for a buying opportunity. Well, right now, as of the hard right edge here, October of 2022, it has a hold rating. So if you're looking to buy this stock and hold it for and treat it as an investment, I would wait for it to get a buy rating. It's currently at in this area here, October of 2022, a hold. But what I'm seeing here is a pretty solid setup for potentially a short-term trade. Let's remove the fundamental analysis now. Remove the fundamental data. We don't have to keep harping on that and looking at it. What I'm seeing here as of the hard right edge, I see a pullback, pretty sharp one there, in just about 4 days off of a new high. Actually formed resistance here, right? Because you had the high in August of 2022, retested that high, never broke above it. So you're establishing resistance, and price falls pretty rapidly in just 4 days to this $340 level. Why is that $340 level significant? Because it used to be resistance. It was resistance here, resistance here, resistance there before the stock price broke above it. And more times than not, when the stock's price breaks above resistance, eventually it will come back down to retest that zone. And again, now that zone is not resistance anymore, it's support. So the reason why I said this, as of October of 2022, it's setting up nicely because that support level is holding. Stock price is kind of moving in a very narrow channel here, and it's doing so on volume that's drying up a little bit. So this is kind of called a quiet period. Okay, I'm not trading during quiet periods. Okay, I'm not trading during quiet periods. What I would look for is a breakout above kind of one of the recent highs. If the stock broke down below support, let me tell you why I wouldn't short it. I wouldn't short it because it's a fundamentally strong company. And I just don't like to short fundamentally strong companies. I like to short poor companies. Okay? Buy good companies, short poor companies. So even though if price broke down below support, that would be a bearish signal, I would take a signal like that on a company with a low RV, with a low RS, that's overvalued, that has negative earnings growth. You following me? Okay, so we're just kind of inverting the indicators to determine a short position. But here, price had pulled back. It settled in nicely to that support level. I would wait for a breakout, and look at that. Got the breakout nicely. Good volume too that came in on that day. Okay, so I'm going to look to take the trade now that I see the strong breakout. Nice retest of support. Also, adding another technical indicator to the layout here, stochastics. Love this indicator. The stochastics oscillator went from below 20 to above 20 as the stock retraced from support. So you have a short-term oversold situation at a support level and then a breakout and a retracement off of that support level. Folks, that is a strong trading signal. Okay, still doesn't have a buy, so if you're looking to hold it, buy it for the long term, you'd wait for the stock to get a buy rating. If this is a stock that's already in your retirement portfolio, fantastic. Let it do what it's been doing. But again, what's to say that it can't be in your swing trading portfolio as well? Okay, so we get the nice breakout above that level. I talked about resistance and how the stock price failed to move above that 370 and change zone. That would be my initial profit target, and the support level that I just bought off of would be my initial stop loss. Very, very simple structure there. Okay, stop loss right under support, profit target. If I see hesitation at resistance, if price reaches that 370 level again and then just softens or hesitates or pulls back, I'll take the trade off. I'm not selling my investment, right? I'm not selling the stock in my long-term portfolio because it doesn't have a sell rating. I am eliminating it from my swing trading portfolio if I see any hesitation at that resistance level. I fast forwarded here just one day because we want follow through. You know, we got the breakout there on October 4th, but we want follow through to happen, and follow through did happen during the day the next day, so we were able to take the trade. I'm keeping a very close eye on resistance, and any hesitation in that zone, we're going to look to take the trade off. Now, you're looking at that setup and you say, "Oh, that's a pretty good setup. That's a pretty good setup." But if you're a VectorVest subscriber, hopefully the question that you're asking is, what was the market timing at that time, right? Were you folks saying, was VectorVest saying that it is okay to buy stocks? And that's a very good question. And yes, we were. Hard right edge here. This is a market timing graph. This is the VectorVest composite at the top. So on October 4th, on the day that the stock broke out, the market broke out, didn't it? Okay. not only did the market break out, but prior to the breakout, right off of the low, the MTI got below 0.6 and the buy to sell ratio got below 0.2. If you're a VectorVest subscriber, you know that below those levels, very, very significant. When the MTI goes below 0.6 and the buy to sell ratio goes below 0.2, we look for those rally days. And we got it on October 4th. We also got a green light in the price column of the color guard, and the trend changed from down to up. So if you're asking the question, what was the VectorVest market guidance? It was on this day, October 4th, we were saying that it was okay to buy. Very important for me to point out there, because I'm not going to show you a setup, a stock setup, and profitable returns and a successful trade in a situation where we told you to not buy anything, right? So I wanted to make sure you understood that even the stock setup was good. You got your breakout, you got your stock confirmation, but the market was also on our side as well. So here, I just want to reiterate the point that I made earlier. Same stock. Now we're going from June of 20 to June of 23. And during this 3-year period, the stock's price stayed above our stop price the entire time. You'll notice that the recommendation of the stock was either a buy or a hold. It was never a sell. These red and green arrows on the chart represent confirmed market up and down calls. Those are our major market signals. A confirmed down call doesn't necessarily mean liquidate every position in your portfolio and go to cash. It's always an option for you to do that. But what our guidance is to stop buying stocks at a confirmed down and let your stop criteria take you out of a position. And if it does, as long as you're still in that confirmed down, you just don't replace it. So even though we got confirmed down, confirmed down, confirmed down, confirmed down, during those confirmed downs, not once did the price of the stock close below the stop price, giving it a sell rating. So this is a stock that you could have theoretically bought in June of 2020 and held it all the way to current. Okay? But along the way, use technical analysis to identify short-term favorable situations. Take a look at the returns that we could have seen off of that support retracement. Now, what happens, right? You get a support retracement, you get followed through the next day, and then what happens, right? Kind of always happens. Price falls the next couple of days, and you say, oh, man, I was wrong. Well, remember where I said I would set my stop loss, right? I would set it right below support. Look what happened. Price fell, retested that support level again on the open of that day, and then rallied strongly and really retraced off of that support level. So even though price had dipped a little bit after we entered the trade, it never fell below support, so we stayed in. And then what happens here? Price reaches resistance. Do you see any hesitation at resistance? No, right? The stock price blasts through that resistance level, up day, and just that short period of time there, from October 4th to October 26th, 8.5% gain, 140% annualized. I'm not saying you're going to make 140% every year, but the annualized rate of return is to kind of demonstrate how significant and how large that gain is in that time period. Very, very nice gain there in just a couple of weeks. Okay? That was the hard right edge before. So now the stock price just keeps rising. It just keeps going up. And then you have this one down day. So let's talk about how I would manage this trade now. You buy off a support. The stock reaches resistance, completely blows through it, no hesitation at all. One up day after the next, you're sitting pretty, right? However, what you're noticing, though, and you have a down day there as of the hard right edge, you're noticing price is getting a little bit overextended, right? A little bit overbought. That formation there, that two-bar formation, the green candle followed by the filled red candle, is called a one black crow. It is a bearish candlestick reversal signal. Pretty reliable one. So not only is the stock overextended, And I'm not saying that because I feel it's overextended or I'm just looking at price. That's the beauty of technical indicators. It kind of tells you or paints a very clear picture. The stochastics oscillator is above 80. That tells me it's overbought. Not me saying price is overbought because it's moved up sharply. We have indicators that kind of help us out there, right? So you have a one black crow formation, that's a bearish candlestick formation in an overbought situation, and follow through the next day, I'm out of the trade. I'm out of the trade. What I would hope to see happen now is another buying opportunity, right? I would love to see price get back down to this support level, right? Because it's support now. It used to be resistance. Price breaks above it. It's now support. I hope price gets back down to that 375 level so I can buy back. Okay? Follow my cursor. There's what we were just looking at. Now, I know the stock went up a couple of days after that. I'm not worried about that. Got a nice gain. Take it off. Look for another opportunity. And then what happens? Hits a new high there briefly. And then what does it do? It lands right at that support level again. So what I would hope to see on the next day is the stock retrace from it. That gives me another buying opportunity. Well, it didn't. It actually crashed down and fell all the way back to the original support level of about 340 where we bought in the first time. Right? Look at the low of the day. To the penny almost. You had a really strong rally there, likely late in the day, and the stock price closed a little bit higher than the midpoint. Nice reversal candle there as well. That's a hammer. And then the following day, you got confirmation. Another opportunity to take a trade. Another opportunity to swing trade a fundamentally strong company that you have in your retirement portfolio, that you still have in your retirement portfolio because it doesn't have a sell rating. Okay, let's take a look at another example. You're going to love this one. Again, let's look at the fundamentals first. I'm not looking, if I'm going to trade a stock, if I'm going to swing trade a stock, I'm not looking at the technical perspective first. Because what happens if I'm looking at a stock and I love the setup, right? It's stochastics is below 20, the stock is at support, it's forming, let's say, a bullish harami, and you get follow through you're looking at that setup and it's a strong setup. But then you look at the fundamentals and you see RV less than 1, RS less than 1, and it's overvalued. I'm not going to trade the setup, even though it looks good, on a fundamentally poor company. So we're going to start with the fundamental analysis first. So here's United, and you're all familiar with this group, darling of the industry. Just a few days ago, price was $491. At the time, we thought it was worth $543. So that's a good start. Strong RV, well above 1. Tells us that long-term upside price appreciation potential is there. Relative safety of 1.30, so it's not a risky investment. Okay. Now, though, as of June 12th, it was in a downtrend. The RT indicator is at 0.93. Now, the VST, which combines those three indicators, is at a good level of 1.19. But if you're looking at this stock and you're saying, is now the time for me to buy it long-term? And I would say with an RT of less than 1 telling us that it's currently in a downtrend and a hold rating, I would say you'd probably hold off. You may have bought it a year ago or 2 years ago and still have it in your portfolio. Never got a sell rating, so no reason why you should sell it. Maybe it's a hold, and that's pretty straightforward. Hold it. Earnings per share of $25.60, nice earnings yield, good earnings growth rate, pays a dividend as well. So remember earlier I said, hey, let's take a mental snapshot of these indicators and the values of these fundamental indicators, because that's what we want to see moving forward. Okay? So looking at United now this is from August of 20 to February of 23. Okay? Only one time. You can barely see the sell rating here, but there was one time in May, June, maybe July of 2022 where the stock got a sell rating. Got a buy real quickly after that and never got a sell after that, so you were able to buy it back in. But during this whole time, from August of 20 all the way to May, June of 2022, never got a sell rating. If this is a stock that you hold in your retirement portfolio, you're making money, right? You're doing pretty well. All of the indicators were favorable. Look at the RV, how high it was, RS, earnings growth rate, everything looked good all the way through. Okay? So this is one of the best stocks that I've seen based on how it behaves and reacts to support and resistance zones. It's a trader's dream. So back here, September, December, March 2021, right? Very strong resistance. Failed to move above, looks like about 375. Failed to move above 375. Just barely got above it there, but retraced. It's still in that zone. And then finally, you got a breakout in April of 2021. All right, that is a bullish breakout above resistance. Strong volume came in on that day as well. A trader will salivate and look to take that trade on follow through the next day. It followed through the next day, and a nice opportunity for some quick short-term gains. A little bit of a pullback there, and you're out. When a stock breaks through resistance, especially resistance where there's been 3 failures, right? Pretty strong zone there. Once price eventually breaks through that resistance level, I can only hope that it falls back down to that support zone. And look at what it did. Not only did it fall back down to the support zone, but look at the stochastics oscillator. Stochastics went from below 20 to above 20. So with the indicator going from below 20 to above 20 and the stock price retracing from support, there's your next signal to take the trade. Price reaches resistance again and fails and breaks down, and you take it off. Now the stock is channeling. Once the stock reaches kind of the resistance level, off of this support retracement, and you take your profits off when you see hesitation and selling pressure at that resistance zone, again, you can only hope that it falls back down below or back down to that support zone, and it did. The stochastics oscillator in October of 2021 also fell below 20, crossed above 20, you got your support retracement, another trade. So in a situation or a time period where, let's say that, again, this was in your retirement portfolio, it's a long-term investment, you're not making much money during this time period, are you? Right? You made some, you give it back. You make some, you give it back. You're just kind of spinning your wheels. But learning how to trade, learning how to use technical analysis to pinpoint favorable price and volume short-term situations helps us kind of supercharge the portfolio in a time where the stock price really isn't going anywhere. We're not selling it out of our long-term portfolio because it doesn't have a sell rating. It's moving sideways. We're looking for good opportunities to supplement that stagnation. Okay, price, you can see what it does. It reaches resistance again. A little hesitation. You see a couple of red candles there, folks. I'll be honest with you, I'm out. Any hesitation at resistance and a little bit of a pullback, I am fine with taking the trade off. And then what happened though? You look at hindsight and you say, yeah, you should have held on. Well, yeah, you see that. You didn't know that at the time. But look, when price breaks out through resistance again, I'll look to be bullish again. So price breaks out through resistance, and then what happens? Like clockwork, comes right back down to test that now support zone. The stochastics oscillator during that time went from below 20 to above 20. And now what's happening? What's happening is your support and resistance zones are being raised. The stock price is now breaking out of that channel. It's moving higher. It's making a new high. It is now creating higher support and resistance zones. And you just continue to do the same thing, same exercise. Price falls back to support, you buy. It reaches resistance, you sell. And notice how I'm not saying short. Why? Because this is one of the most fundamentally sound companies in the stock market. Okay? I'm not going to short even off of resistance. Fundamentally strong companies. So I'm defensive and taking profits at resistance, and I'm looking for another buying opportunity if and when price breaks down or falls back down to support. So here is the retracement off of support, a little hesitation, take your trade off, you get a breakout above that resistance level again. Price eventually fell back down to support, and you're buying. Buying again. Another opportunity. There was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 11 trades so far. 11 opportunities, another one there, that's 12. And there in January, another one there. Okay, so you're learning and you're understanding these very key, and this is just one indicator, guys. You know, two indicators, stochastics and support and resistance. There are dozens of technical indicators that you can apply, okay, to find different types of situations. You know, Bollinger Bands is a volatility indicator. When you learn how to use Bollinger Bands, you'll learn how to identify squeezes, Bollinger Band squeezes. That is an indication of an imminent breakout. So a lot of different technical indicators out there. Question is, all right, I get it. Fundamental valuation can be and should be gelled and merged with technical analysis. It doesn't matter if you're a long-term trader or a short-term trader. Okay? If you're a long-term investor, follow me here. If you're a long-term investor, fundamentals are the most important, right? You want to make sure that the stock is undervalued, has a good RV, good RS, good earnings growth rate, but maybe you don't want to buy it at a 52-week high when the stochastics oscillator is at 95 and the stock is going parabolic, right? You don't just want to buy it. I know your objective is long-term, 3-5 years, whatever. Don't not care about the price that you get, even though you want to hold on to it for the long term. Let's maximize returns. So even though you're a fundamental investor and never before did you ever pay any attention to technical analysis, start doing that, because now if you learn how to identify these favorable situations, you got a good stock, you want to buy it for the long term, but it's, again, going parabolic. It just broke out of a resistance zone. So now what are you thinking? Well, you're thinking, let's wait till it comes back down to that zone, to that support zone before I buy. You're just trying to maximize returns and getting the best price. If you're a trader and your objective is only a few weeks, you're still looking at those technical setups, of course, but you're only trading the best stocks, and that fundamental analysis is very important. So how are we going to find trades? There's different ways to do it. There's what's called the one-by-one method. This is where you can go into the stock viewer, you can go into the S&P 500 watch list, and you look at a list of stocks and you do the analysis, right? You look at the price of the stock compared to its value, what the RV is, what the RS is it an uptrend or downtrend? Does it have a buy rating, growth rate, right? You're looking at all those indicators. If you're now trying to identify a buying zone, you'd have to look at the chart. Fundamental analysis is easy and over with before you know it. You're just looking at price to value and all the indicators, and just right out of the gate, Micron, I mean, it's a great stock, right? Undervalued. Upside potential is tremendous. It's a safe investment. It's in an uptrend. It's got a buy rating. You'd have to look at the chart to actually see if it's setting up for a buy. You'd put stochastics on, you put support and resistance on, just to name a few indicators, and you'd have to go through the charts to see. Now, that's not a very efficient use of anybody's time. My preferred method is to use searches, to use scans, okay? And within our VectorVest real-time program, we have a tool called ProTrader, which allows you to scan for technical indicators. So this is just an example. Okay, this is an example of a scan that you might run. We have a search in the program, in the VectorVest Unisearch tool, called Prudent Performers. Okay, it looks for stocks whose earnings growth rate is greater than 15%. It looks for relative safety to be greater than 1.15. It looks for relative value to be greater than 1.25. So we know this is the pool of stocks that we're swimming in. What I added is one line, and ProTrader allows us to do that. The tool in Unisearch called ProTrader allows us to add technical indicators to a fundamental search. So what I'm looking for is the stochastics oscillator to cross above 20 in the past day. I know the stock is fundamentally sound. The scan is telling me, is returning those type of stocks because I'm telling it to. The search is telling it to, but I'm looking for a better opportunity. So just a few days ago, June 2nd, Churchill Downs, great company. Over this one year time period here, stock has gone from bottom left to upper right. As of the hard right edge there, it just recently pulled back, right? Off of a new high. Where did it stop? Where has it stopped? It stopped at an old high. It stopped at what used to be resistance and is now support. The stochastics oscillator has just gone from below 20 to above 20. This is a real-time example. Okay? From that simple scan. Good setup. Here's another one, FI. Oh, by the way, let me show you here real quick. Let me go into the Unisearch tool. Let me just take the date. I'll show you. I'll take the date back to June 2nd, and I'm going to run that scan. You don't have that scan in your program, guys. That's just a modification of our prudent performers search. Just adding that one-line parameter. If I run that search on that day, June 2nd, the top two stocks, Churchill Downs, FI. Okay? Look at the indicators. All good. Maybe a little bit overvalued, but that's okay. Fair. It's about 100. It's about, no, not actually. 142.19, 142.27. So fully valued there. FI is undervalued. GPK is undervalued. So right out of the gate, run this search. I got some pretty good candidates. So here's FI. Bottom left to upper right. Stock just pulled back off of a new high. Where did it stop on June 2nd or just prior to June 2nd? Right at support. Stochastics goes from below 20 to above 20. The stock price retraces from that support level like we demonstrated with United and McKesson, right? And off it went. You see those two little candles there, those long lower wicks? I love candlestick analysis. It's a big part of my chart analysis and just swing trading stock selection. If I see those long lower wicks and closes off of those lows and closer to the high, if I see that type of behavior and reversal type price action at support, I know that's a pretty strong signal. And it was in this case, just recently, price just popped and pulled away from that support level. Here's another one. Fantastic. Bottom left to upper right, GPK. Used to be resistance, 1 touch, 2 touches, 3 touches, 4 touches. A little bit of a breakout, kind of a hesitation, didn't really move much above or below that support level, that resistance level, but eventually broke above it, retested it. End of April 2023. Stochastics also went from below 20 to above 20. So even here was a good opportunity, but the stock price made a new high, came back down, look at where it stopped, right at support again. Stochastics goes below 20, crosses above 20. That's a bullish harami. That's a bullish candlestick signal there. The red bar followed by the unfilled green bar. Good follow through the next day, and look at that. I mean, that's when we do these webinars or when we teach courses, we're showing you examples, right? We're trying to teach you these techniques with historical examples, and we say, hey, look back in 2022 when this stock did this, and wasn't that a good setup, right? We have to teach you the system and the technique, but here are real-time examples just from a few days ago. Okay, so this is what I was just teaching you historically on United and McKesson, but it's happening in real time. Okay, a lot of questions are coming in about, this is fantastic. I never thought to merge the two. I see folks saying I've always been a fundamental investor, never ever paid any attention to technical analysis. Technicians are saying I never paid any attention to fundamentals. This is good. So maybe a question that you're asking yourself is, how can I start doing this? How can I take my game to the next level? So the choice you have is a couple of choices. 1, do nothing. Number 2, do it alone. Maybe take bits and pieces of what I taught you here today, or let us show you how to do it. And I always like to just give answers away. And that's why we put together this course. It's a course called Uncovering Trends, Technical Analysis the Easy Way. What you get, let's go through some of the things that you get with this course. The complete Uncovering Trends program, 6 training modules. There are over 60 lessons, folks. 60 lessons, about 10 to 12 hours of content within those 6 modules. So you get the videos, all the slides, all the graph resource tutorials, 1-year access to the course. This says 6 live mastery support sessions. It's going to be 7. And I'll explain why in a moment. So you'll get 7 live mastery support sessions. The modules and all the lessons are pre-recorded. Okay? And this is only the second class we've had with this course. The first one was in February. So when you go and you watch the modules, you'll notice that it's relatively recent examples. You get private dedicated email support as well. Myself, Stan Heller, Ron Wheeler, and Dr. David Paul are your instructors for this course. So you got a really nice cast of instructors. We're going to give you 7 days access to VectorVest Premium if you don't already have it. VectorVest Premium is real-time data, which includes the Pro Trader technical searches, which is very important. Okay. Jay says, do you do this for ETFs? No, we don't do this for ETFs because we don't track the fundamentals of the ETF. We don't track. When you look at an ETF in the VectorVest program, you'll notice that the RV and the RS are both 1. The value is the same as the price. There's no earnings data. So no, we don't do this. We don't do this type of analysis and exercise on ETFs because there's no fundamentals to analyze. Okay? But here's the course. Here are the 6 modules. We begin with the difference between fundamental and technical analysis. We'll talk more about that in that module. Module number 2, the importance of price, structure, and volume analysis, the different ways to view price, trending, neutral, extreme market environments, the importance of volume. Module number 3, the introduction to candlestick trading. So I'm going to teach you a couple of different bullish and bearish candlestick reversal signals and the indicators that you should use with them. Module number 4, this one was a beast. This one is the big module. This is the one where we had to break up the mastery sessions because there are over 16 lessons in this module. This is where the technical indicators really come in. We teach you about moving averages, MACD, Bollinger Bands, RSI, stochastics, support and resistance, envelopes, on-balance volume, momentum. What did I miss? Not sure, but there's more. Fibonacci retracements, and we talk about how to identify bullish and bearish divergences as well. Okay. Module number 5, look, there's more to trading and investing than just the setup, the stock setup. There's managing ourselves. There's position sizing rules and guidelines. There's diversification. There's risk management strategies. There's having a trading plan and asset management. We go through all that in Module 5. And then finally, the VectorVest Advantage, where we just kind of put everything together. So what I'm going to do, guys, is I'm going to put the address that you see there at the bottom. Now, the course is normally $1,990, but we have an early bird rate of $1,495. But look, this is the last webinar that I'll be doing for this course. So I want to knock an extra $600 off there. So $895, you get the 6 pre-recorded modules, over 60 lessons, 7 mastery support sessions, 1-year access to the course, and VectorVest Premium for 70 days if you don't already have it. So what I'm going to do is I'm going to type the address that you see at the bottom there, vectorvest.com/trend, so you can just click on it. So for $895, this rate will go away in a few days. It will revert back to the early bird rate of $14.95. By the way, this is the best rate available for anybody, even if you're an elite subscriber. Okay, even if you're an elite subscriber. Folks, by the way, this is 100% money back guaranteed. If after the 7 weeks you've done all the work, any assignments that were given, you've watched the recordings or come to the classes live, and you say, you're still not satisfied, we'll gladly give you a refund. So questions are coming in. Good, I'm glad I'm getting there. Questions are, when are the live sessions? When is the first one? What happens if I miss one? Here are the dates for the live mastery support sessions. We begin in 2 weeks on June 8th. All of the sessions will begin at 1 p.m. Eastern Time. They are all recorded. Oh, and if you go into the course, once you register for the course, you go into the course outline, you'll see all of everything there. You'll see all the modules, all the lessons, and you'll also see the old mastery sessions that we did 4 months back. Those mastery sessions that you can watch, those are recorded from 4 months ago, they will be replaced with the ones that we do for our class here. And the reason why we broke up Module 4 into 2 parts is because folks in the first class said, look, you're teaching us 16 different indicators. It's impossible to review them all in one mastery session. So we broke it up. We do the first half of module 4 in part 1, second half in part 2. Okay? Yes, thank you, Raul. I did. I put the slides in the handout section. You guys should see them there. In your GoToMeeting control panel, you should see handouts. It should say 1 of 5, and it says Uncovering Trends webinar. Don't worry about the date. It says February of 2023. But there you go. I just put the slides in that in the handout section there. You're welcome. All right, guys, I got a few more minutes here. I'm going to stick around. Any questions on anything that I covered today? Any questions on anything about the course? Again, we begin in 2 weeks. Myself, Ron Wheeler, who doesn't do a lot of trading courses. If you know Ron, you know he's our options manager. He does all of our education in terms of options, him and Jim Penna. So we're really lucky to have him here for this course. Stan Heller, who's our VectorVest consultant for Canada, and Dr. David Paul, who's our managing director for VectorVest UK. So really, really nice cast of instructors for this course. One of my favorite courses to teach. I like this. I like Trade Like a Pro as well. But really important course for everybody. So this is not an investment course. It's not a trading course. It's both. Okay? Because like I said before, even if you plan on holding a stock for a long period of time, your job is to make the most out of that investment, right? And to identify a better buying zone than maybe the one that you're currently seeing, where price is well above resistance and it's going parabolic, and stochastics is overbought. In the short term that price is more likely to fall than it is to go up. So why are you going to buy into it? Wait for that breakdown. Nope. Todd says, do you need a minimum account size to make this worthwhile? I am just a beginner. Nope, not at all. You don't need there is no minimum account size. We don't manage your money. So what you have to start with is what you have. All right. My email address, guys, by the way, is Jerry D, Jerry, D as in David, at VectorVest.com. Jerry D at VectorVest.com. If you have any questions about the course, our email addresses, mine, Ron's, David's, and Stan's will be in your resources, will be in your slides in the course. So if you ever have any questions about anything that any one of us taught you during the course, do not hesitate to email us. Okay, so there's that dedicated email support that you'll get, really in perpetuity, because we're not just going to stop responding to you guys. We're in the education department. So if you have any questions about any of our course material, we're the guys that you come to. Okay. All right, folks. Well, look forward to working with you. We start in a couple weeks. Tomorrow's Friday. Have a great weekend, everybody. Maria says, already bought the course. I was waiting for one like this. Thank you, Jerry. Awesome. Good, Maria. Fantastic. Awesome. Looking forward to working with you. See you in a couple weeks. See you for our first mastery session. If you can't miss the live sessions, which is understandable, they're at 1 p.m. during the day. They are recorded, and they will be uploaded to the university usually that night, that evening. Okay. Thank you, Dave. Appreciate that. All right, guys. Have a great rest of your day. Have a good weekend, and we'll see everybody soon. Take care, folks.